Before we decide to begin our investment journey, it is important to understand what the purpose of investing is. Depending on your purpose, you will be creating a strategy to invest. Most beginners make the mistake of trying to figure out the strategy first without even comprehending their own goals. Blindly following an influencer's advice will land you in trouble, especially in the stock market. It is your hard-earned money and must be invested to suit your particular situation to the best. You have to know for yourself by analyzing your current income, your ability to take risk, and your experience in investing. Having said that, here are 5 types of investing strategies used by different investors as per their experience, capital, and risk appetite. Investment strategy number 1: value investing. Technically speaking, this type of strategy involves investing in stocks that are currently undervalued, but have the potential to increase in value over time. The market value of the stock when trading below the intrinsic value of the stock is referred to as an undervalued stock. Now, the intrinsic value is a more or less constantly growing number. However, the market value fluctuates regularly based on a multitude of factors. A value investor buys when the market value is below the intrinsic value and sells when the prices are up or the stock gets overvalued, pocketing the difference as profit. This type of investing is at the face value itself a higher risk strategy. You basically are betting that the future will be much better than the present. Also, people engaging in value investing usually approach with a larger than normal capital to maximize profits from market value fluctuations. Value investors tend to understand the market and the particular sectors very well. They have a command in all the 3 departments of capital, risk, and experience. Investment strategy number 2: growth investing. Growth investing is an investment in stocks of companies showing higher growth in terms of the top line, that is revenue, or bottom line, that is profitability, or both. Higher growth potential compared to competitors in the same segment or compared to the industry average. Once again, similar to value investing, growth investors also possess good domain knowledge. Although, unlike value investing, one can start his growth strategy investment with lesser capital and lower risk. The essential difference between value investing and growth investing has to do with the investment intent. A value investor invests in a stock that has the potential to rise in value. A growth investor, on the other hand, invests in stocks that are already showing growth signs, proven by tangible data. Investment strategy number 3: income investing. Income investing involves investment in avenues that provide a steady stream of timely income. A perfect example would be dividend stocks, giving a certain percentage of profits as dividends on a regular basis. Another way to ensure income from investing is to seek out the interest payments as income. You can do that by investing in bonds and debentures. This type of investment strategy is much suited for an investor with a relatively low risk appetite. Investment strategy number 4: conservative investing. Conservative investing is based on lower risk, accepting the lower rewards as the outcome. The approach is more like a dollar cost averaging, and the intention is to keep the investments safe. Conservative investors rely on a combination of debt and equity instruments, with equity the higher risk component being the smaller portion of the portfolio. Investment strategy number 5: aggressive investing. The final investing strategy we discussed today is an aggressive investing strategy. It is pretty much the opposite of conservative investing. The risk factor is exponentially higher. The aggressive investors tend to put their money in investments such as commodities, small caps, mid caps, and even collectibles. The experience and the capital involved are high, which accentuates the risk, but at the same time promises a much higher reward. The portfolio of an aggressive investor is heavily lopsided towards equity, with a large share of small and mid-cap funds. So guys, these are the 5 investment strategies that I had to lay before you today. Depending on the 3 main factors that I mentioned, namely capital, experience, and risk appetite, you may choose the strategy that best helps you. If you want to learn more about how to create your own personalized portfolio, check the video link in the description. Remember, there is no need to get overwhelmed by all these financial terms. Every journey has a start. Keep learning and keep growing. Like the video and subscribe to the channel for similar content on practical finance. Take care of yourselves and your families. God bless us all. Thank you.